Well, hi traders, we are at a very interesting juncture in financial markets. We have equity markets which have seen earnings very much out of the way. I know we've got Nvidia coming up on the 19th and that's still going to be very much in play, but most of the bulk of the earnings, the mega cap earnings are out of the way, and some of them have been trading pretty well, some of them have been trading very poorly in response to what we've been seeing. But we have seen the market really trying to make up its mind exactly what it wants to do here. And I think that's why we're in a quite an interesting point of view. Yeah, we saw a really weak tape coming through on Tuesday. Risk was coming out of the market. We thought that perhaps the S&P could trade down to its 50-day moving average. But then we've seen a bit of a snapback on today's session, although it finished well off the highs on the session there. Now, obviously, what we've been seeing is concerns about credit spreads. We've seen a whole raft of mega cap corporate issuance coming through over the last week or so. That's sucked liquidity out there. We've got concerns around the funding markets. Does this mean the Fed will have to potentially come in and do some sort of quasi QE light situation going forward? We've got the Supreme Court decision very much in the mix, and with a lot of the good news priced into the market with valuations high, people have been concerned about what's going on. So people have been rolling into the higher quality end of the market. Now, with the dollar making a move higher, we've seen gold moving higher as well. Treasuries have found bid. It's all going on at the moment. We try and make sense of this topsy-turvy world and see where the probabilities lie. This is the trade-off. Hi, my name's Chris Weston, Head of Research here at Pepperstone, and we're joined in 2 seconds by Blake Moreau from Forex Analytics. And as always, we were discussing the setups, the movers and shakers, what we like, what we don't like, and where we see the probabilities in this market. Blake, come into the programme, my good sir. Now, it's interesting, isn't it? Because, you know, we've seen these big one-day moves in response to earnings. You know, you have seen some really disappointing price action in the likes of Meta, for example, where your capex or expenses. You know, you've seen other stocks like Amazon doing well. You know, we've seen good growth in AWS, and you know, you've seen Apple trading pretty strong. You know, and now we're seeing Nvidia back. You know, continue to hold above $200. Treasuries are all over the place at the moment. You know, and you've seen, I think, the investment grade side of things has been very much important. I think it was last week or so, we've seen about 130 billion of corporate supply from likes of Microsoft, etc., as they look to fund their infrastructure build out. And that's sucked liquidity out. Obviously, the funding market's there as well. But, you know, it really is, for me, it's an interesting point because, you know, the S&P's 1 or 2% from all-time highs. Russell looks pretty good. NASDAQ up and down. We're still pretty close to all-time highs, but sentiment has shifted to being somewhat more bearish, considering as we're only 1% away from highs, and the dollar's made a nice move up recently as well. So yeah, it's all over the place, these markets. How you feeling out there?
Short it. All right, okay. Let's move on to the first segment.
Let's go home. No, I like it, mate. If you've
show's over.
Why say it loud when you can say it in one word or two words?
Right. I mean, let's just get straight to the point. Let's cut to the chase right now. Realistically, I love these markets because now for me it's a two-way price action. I hate markets that are just one directional, and we've been in that way. We've been in that mode for so long. But you know, risks are emerging. We're going to talk a little bit about, you know, what's happening in the Supreme Court. You've got government shutdown still. You know, I think there's some optimism that maybe we're going to get past this by the end of the week, even though we're not going to talk about the shutdown as a whole. You've got earnings coming out, and we've seen mixed price action. You're right. You know, stocks like Meta. But, you know, on the flip side is we've seen a lot of, you know, breakouts due to earnings. But we're starting to see two-way price action. As a trader, we as traders should really welcome that. I love being able to
buy and hold, timing the market and timing the market. We say, mate. I just want to ask you a quick question because we're going to move on. But to talk about the shutdown, one of the factors that's really come up is this idea that Trump's going to try and corral the Republican senators to remove the filibuster and vote against that, which could be seen as somewhat unconstitutional. I'm very un-American in that situation, but it would mean obviously a formal end to the government shutdown. How does that sit with you?
Well, we should probably just move on. It should probably just move on.
Talking about moving on, they're talking about, because of the shutdown now, they're talking about cutting 10% of the flights in America, and that was the reason why the last shutdown actually finished, because we saw national security. I think it was DC, or was it New York, one of the airports, security around that was actually diminished because they couldn't go to work. So they brought people back. So, but I think it's starting to become problematic for Americans, you know, to do with healthcare, you know, ramp up some bits and pieces in the Affordable Care Act. But yeah, now Americans could be impacted by their travel schedules, and I think that's just going to cause people to get a tad irate. Anyway, let's go to Topical Thunder. Yeah, well, we've just answered quite a lot of the stuff, but I'm going to take the market pulse, right? So, as I said, credit spreads had been widening out. I mean, certainly in Oracle, where you'd seen a big blowout in credit spreads because of their significant raising, which is pretty well supported under their play into infrastructure AI scene. We saw the move down on Tuesday, reasonably outsized move. The VIX traded up to 20%. And what we've been seeing, Blake, for me, is this rotation into higher quality growth. People have been, high short interest stocks have been underperforming. There'd been a little bit of underperformance from cyclical stocks. We've been talking about poor market breadth for a while now. It was all being, people were just rotating into the AI plays, the semis, and some of the Mag 7 stocks there as well. That's people wanted growth, and they were happy to pay whatever for it. And that breadth had been, had been very poor, and people have been buying a little bit of volatility and we thought, well, after that point on Tuesday when we were down, we thought, people were talking about 10% corrections in the S&P, and then we've just seen a bit of a kick back up, although we were trading stronger and things were looking good again, and we thought, we're back again, and now we're sort of a bit of a tail off towards the back end of the session. So the market just can't make up its mind. It doesn't seem like we've got a huge amount of positive catalysts to set risk off. We'll talk about the Supreme Court session in a moment, but you talked about these two-way risks, and I agree. I mean, you've got to be humble to what the collective is saying in the price action. If the market's going up, it feels like it's kicked. You could go long. If obviously market goes down, higher volume, closes near its lows, maybe we get follow-through selling. So it's a two-way move now in a lot of these risk assets, right?
Yeah, there are, and I think these are the type of markets where you have to look at some story that you find that might be a driver. You got maybe a day or two's worth of move you can squeeze out of it. Even you talk about like the balance of risk. There's a article that went under the radar a little bit. I just posted it in our community from Bloomberg about how OpenAI is looking to seek government backing to boost its AI investments. I mean, its infrastructure is going to cost. They expect it to be about $1 trillion. And somebody responded to that article. I saw it online. Somebody responded to it called "We work on steroids," and I was like, "Oh boy, that's."
You bring up a good point. It is a good point though, because like when people talk about this bubble, I'm not seeing that in the hyperscalers. I'm not seeing that in the video. I generally believe that their earnings have correlated nicely with the share price, and as have their revenues, and their margins are very, very strong. So I don't think that. I think OpenAI is the one that you want to look at, right? Because you talk about this massive infrastructure build out, and they're not properly monetizing it. I mean, their money, the revenues are significantly lower than what they're spending. So that's the place where if you want to see proper froth, it's got to be OpenAI, right?
It is, and so we do a little bit of AI work behind the scenes and forex analytics, and it's actually quite costly if you end up spending a lot of time searching and having your LLM models,
large language model,
LLM models, searching and doing work for you. It's actually a quite costly endeavor, especially from the business point of view. And there's a lot of companies that have to take a step back and say, wait a second, are we even able to monetize it? We've actually had to ask those questions ourselves based on some of the work that we're doing behind the scenes. And so it's going to be a really interesting next, I think 2026 for OpenAI and all this infrastructure spend and what companies decide they are or are not getting out of it. So you talk about balance of risk, Chris. There are you have to start looking at this market as a two-way market. I don't rule out all-time highs, but then again, I'm not chasing it at all-time highs. I'd rather buy a 3% dip in risk than buy a 3% rip in risk.
I think one of the on this subject, I know we've got to move on to tariffs, but I think one of the big political debates that's happening now, and I think will become the big political debate in the US, will be about energy usage through AI. This race between China and the US to be the dominant AI player by 2030. A lot of that comes down to who's got the energy capabilities. China certainly have, the US certainly have. But it's going to, the energy costs are going to go up in America, and can that be subsidised? I think that's going to be a big political debate amongst Democrats and Republicans, certainly as we go into the midterms next year.
100% agree with that. All right, Chris, let's move along before our producer slaps us both upside the head.
He loves
I want
that.
to talk a little bit about the Supreme Court versus Trump tariffs. You know, this comes in, and I want to make sure I get the acronym correct here. It's the International Emergency Economic Powers Act, the IEEPA. That's what's coming under scrutiny, and it is it's basically the tariffs that President Trump enacted on China, Canada, and Mexico. And this has been, you know, there was a 3-hour deliberation. It was it went on longer than was allocated, and a lot of people are saying, hey, these justices, even though there's 6 conservative, 3 liberal judges, the talking points were pretty, you know, pointed against what the Trump administration is doing. So people are now starting to assume that, you know, the Supreme Court's going to rule on this soon. But let's just make sure that we discuss this, because I hear a lot of people talking about it right now, and most experts don't even expect some sort of ruling to come out until after the beginning of the year. If it came out, you know, mid-December, end of December, it would be a surprise. And the market, it would catch the markets off guard. So, you know, I saw a lot of people referencing like Canada and, oh, let's buy Canadian dollars because today, you know, the Supreme Court's like kind of poo-pooing on, you know, the Trump tariffs. And no, they're having debates, but don't expect some sort of resolution here within the next, you know, couple trading days. A lot can happen in the Canadian dollar between now and the time that this ruling comes out, believe me. So I just want to make sure that people are aware that it's not something, this is the beginning discussions between the Trump, you know, attorneys and lawyers and Trump administration, you know, legal counsel, and what's happening in the Supreme Court. So,
yeah, I mean, it's a good point. And I think it's really hard because, like you say, we've heard the orals for and against that have been put together. And yeah, like if you listen to what people like Chief Justice Roberts says, or, you know, Amy Coney Barrett or Kagan, I mean, yeah, they've got to give them mixed reactions. But the market is, and if you go to Polymarket, there's I think a 76% chance that it goes against Trump. Now, that could be wrong, but that's the kind of leanings we've got. And that's where the expectations is. Now, this is not a binary outcome. There's about 6 different permutations of what can happen. Obviously, the worst case scenario here is that the IEEPA tariffs are ruled completely unconstitutional and an overstepping of the legality and his powers. And that means all reciprocal tariffs, fentanyl placed under the IEEPA tariffs would be marked down. It seems unlikely that all tariffs are going to be marked down and an overstepping of his executive powers, but that would be the worst case scenario. Now, you know, what's going to happen if those tariffs are marked down and seem unconstitutional? It would be a very, very, very messy process. I mean, we're talking about businesses who have already in the US lined up legal issues to ask for those tariffs back that they've paid. And there would be billions of dollars going back to the corporate sector in those tariffs. So they'd have to sort that out. There hasn't been anything on the consumer now because businesses have passed some of these tariffs onto the consumer. You know, who's going to protect the consumer who've had to pay higher tariffs for something that's now been rescinded? I mean, it would just be a ridiculously messy process, and the market would struggle to do that. We know that their new tariffs have got these other sections that could be put 301, 223, 1 blah blah blah, 3 whatever they are, could be pulled, but they could take some time, and they may need congressional blessing to go through. And obviously, Trump's use of it. And I do agree. I mean, if you listen to Justice Sotomayor, she came out with a situation where she said they said, you know, look, what you've used these tariffs for are not always in America's interests in this situation, and used it in national security. I mean, we talked about the 40% tariffs they placed on Brazil because the Supreme Court there went hard on a former president, you know, Bolsonaro, and then the tariffs on Canada because of them running an ad during the World Series. I mean, this is just him going, right, I want to use tariffs for an effect. They're not in the interests of that situation. So, but going back to your point. You know, we could see tariffs being marked down on certain things. We could see it's being thrown out, pushed down to the lower court. They may come out and say, look, Trump was correct in his use of these powers. We don't know. So it's a very complicated situation. But the worst case scenario would be very, very bad for markets, I believe. Bad for the dollar. I think it's bad for risk. We wouldn't be able to price risk. And America, going up to the last financial year, the US had collected $180 billion of tariffs and under these tariffs. So it'd be a very messy process. But yeah, like you say, the BBC were running an article this morning saying that we're likely to get the findings in January. Now, that doesn't mean the press aren't going to come out with it before that point, with little nuggets, because the problem for us as traders, Blake, of course, is that we need a defined time when something that's this punchy, and we're constantly on headline watch.
Mm-hmm. Always, and headline risk, baby. That's headline risk market.
I hope it comes Christmas Day.
To makes it for Christmas. Santa Claus is coming to town for you, just for you.
Sprouts and headlines. There you go. All right, let's go to the dollar. So I've gone a bit too long, but it is probably one of the biggest known unknowns out there in markets, and it's something that is very complicated, and we need to sort of be across the risk for that. Now let's go to the US dollar, because it's been a stealth move, but the dollar index is up over 4% since the September lows, and you've seen a really nice move in the dollar against the pound, the Kiwi. You certainly against the CAD. I know you've got a chart on that later on, but you've seen this kind of, I want to call it a stealth move, because it's gone against market positioning. The market, certainly real money accounts were very short US dollars, and that dollar move's now moved up. And we'll talk about the charts in a moment. But for me, there's two things that have worked concurrently here, Blake. One is that you've seen a better feel towards the dollar because of the agreement with China. So the negative risk premium, political risk premium has fallen. We've seen a little bit of repricing in long end rates. The Fed were a little bit more hawkish. They've thrown conjecture and optionality around the December meeting, blah, 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 blah. But on the other side, obviously, you've got issues on the other side of the equation. Canada's got issues around their output gap. They've been cutting rates. The UK looks like it's an absolute mess at the moment, with obviously everyone focused on the budget coming through, and then potential capital flight from anyone with any money. And obviously you've got French political issues as well. So you've got a negative factor on the other side, but then you've got pro-positive situations, and the dollar's rallied. So where do you stand on this right now?
Well, I don't know. I mean, you saw the data today. I mean, we had even though it wasn't official data, we had the ADP data came in not so bad. We had the ISM services data come in expansionary territory. I believe it beat by a full point or close to that on the ISM services. Maybe we start talking about U.S. exceptionalism again, from an economic data standpoint. Are there a lot of risks? Sure. And has it been stealthy? Yeah. I mean, last week, for one of the setups, we talked about the euro butterfly pattern. And the euro is making its way down towards the 114s as we speak, and it's made its way from 116 last week doing this show to 114. So it's we are seeing it go. But the thing is, if you look at this counter trend move, Chris, some currencies have really extended their move, like sterling, like Kiwi, as you pointed out, and sterling. The euro hasn't even gotten to its 38% retracement, which would take us all the way down to 112. So, from a bearish structure to bullish to bearish structure, it doesn't even shift. It doesn't even shift the euro from being bullish to bearish as long as we trade above 112 and change. So, could there be some more of this stealth move coming? I think there could be, especially with the data that we've been seeing.
Yeah, I think the pain trade still remains to be higher, but it doesn't feel like the time to be structurally short dollars is upon us right now. Maybe that's a 2026 story. But, growth in the US, I know we've got concerns around the labour market, and we've got, a two-speed economy. If you look at the earnings season, companies that have been leveraged to lower income households and lower income spenders have massively underperformed those companies that are to do with the upper households. And I think that so you do have a bit of a two-tier economy, and that's something that do need to be. But yeah, growth's pretty good. The Atlanta Fed model is suggesting that growth for the quarter is running nearly close to 4%. So whether that gets revised down, but that's where we are. The labour market fears probably are a bit overstated at the moment. And next year, Trump could turn the taps on in a big way ahead of the midterm. So yeah, I feel like there's probably some further upside in the dollar here.
Well, man, you guys, speaking of Trump, without getting into the elections, but the mayoral races that just passed last night, it was a little bit some upset. I mean, you got Republicans are kind of scurrying around today. So
Yeah.
anyway, let's
Well,
talk.
I think they certainly have spoken out in New York, haven't they?
They have. Let's talk a little bit about crypto and talk about this move that we've seen. Speaking of like stealth move, Chris, Bitcoin's really been underperforming risk, and it's been doing it for the last couple months. Or a few weeks actually, as stocks blaze out new highs and new all-time highs. Bitcoin's been stalling, hit a new high, and then kind of gave us a false breakout. We traded below 100,000 today. I'm in the camp. I don't know if I'm going to find myself on the wrong side or right side of this argument, obviously, but I'm in the camp that, Bitcoin and crypto, at least, Bitcoin and some of the bigger names, I kind of liken it to the internet bubble, if you will. There's going to be a lot of altcoins that just won't make the cut at some point. But I think crypto is here to stay. Whether you're talking about Bitcoin and Ethereum, I think you look 5-10 years out. If you bought crypto at these levels, you're probably going to be happy. What altcoins managed to stay? It's kind of like looking back at the internet bubble and saying, Mindspring and Yahoo didn't quite make the cut, and neither did AOL, but Microsoft and Google did. So you're gonna see, I think, a lot of that happen in years ahead. But the question is that I wanted to ask you: is this a place that we start buying some of these bigger names? Especially Bitcoin. As we get below 100,000 and get towards maybe, let's say, 70 or 80,000 again. Are these levels you buy, or are we putting in a much longer term top that I don't think is in? Where do you stand on crypto right now?
I think this is Bitcoin and Ethereum have been the sort of canaries in the coal mine for risk. I think they've been trading pretty poorly since mid October, and then we got the break on Bitcoin of 107,000, and we saw that really strong move down to 98,000 or so. But then it has rebounded quite nicely, and buyers are there at this point. But it has, now that we've got equity markets showing that two-way risk, maybe a bit of distribution coming through in the S&P, NASDAQ. I guess if the NASDAQ starts to grind higher and finding some love as going into the year end, then I think perhaps crypto will be well supported as well. We've got to look at how sort of the more leveraged, junkier end of the town in equity markets trade. Things like ARK, if that starts rallying again, then you're probably going to see crypto finding some love. But if we were to see the S&P take a leg down and sellers come through and it takes out and actually closes below the 50-day, I would expect some of these liquidity momentum vehicles to underperform as well, and I'd expect crypto to take another leg lower in that situation. So I think it's brave to think we're out of the woods yet. And I think you've just got to expect some volatility if you're trading Bitcoin and Ethereum. I think you need to see financial markets finding their love again and finding a positive tone going into year end, and people chasing that upside momentum in those factors before we're out of the woods. But these markets have been trading pretty poorly for a while, and as I've said before, I think the best way to trade Bitcoin and Ethereum is not to buy the dip, it's to buy the rip after the dip. Let other people do the hard work for you, find a bottom and get that momentum building and cooking, because strength breeds strength in these markets, and that's the way I would trade it. But I think you're really you're beholden. They have led the way in a lot of these risk assets, and they are, for me, they are liquidity. As I say, the balance of risk now, we're missing a bit of a catalyst for a lot of these markets. We've seen big outflow or reasonable outflows in the Bitcoin ETFs. If you have a look at the treasury mining entities in Bitcoin, and they've been trading so poorly. Strategy's been all sorts under pressure, down about 45%. Tom Lee's fund's been getting absolutely hammered. I think their average price on Ethereum for their holdings is something like 3,900. So I think they've sit on a paper loss of about $1.3 billion or so. So there's a bit of stress out there, but I'm positive on the longer term, like everyone else. But I think for me, buy the rip after the dip is the play to go on crypto. So we're not quite there at the moment. I'd be watching broad financial conditions on that. Anyway, let's go to the charts that matter. This is set up. Let's go to the small cap index, the US 2000 or the Russell. So we obviously made a series of higher highs. We're now making short-term lower highs, and we found some nice support around sort of that blue horizontal support at the bottom, around 2,400. That's your line in the sand for risk for me. I think if we get close below that point now. Now I brought this up because November is a very, very strong time for the Russell, especially. This is the month where I think in the last 15 years. We've closed higher in 12 of those 15 years. So for whatever reason, it does seem to like November. And maybe that seasonality kicks in again and we can see a stronger play through. But what I'm looking at now is because we have held that line at 24.20. And what I want to do is, again, just adopt a sort of a buy strength mentality. I want to see the buyers stepping up and showing that they have control, because right now it's could go either way. I mean, it's sort of a two-way market there. So I want to be seeing a close above that top horizontal blue line, just below 2,500, and that would tell me that the buyers have stepped back in control, dominating the tape. Of course, it doesn't necessarily lead to a guaranteed outcome, but it would show me that there's a higher probability that can kick further. So for me, there's a really interesting setup. It's a seasonally very strong performer. The downside, is arguably skewed to low on a break of the downside. I want to buy strength above that top horizontal resistance level there. So just get that cooking and let the rate of change push up a little bit higher and get some of those momentum indicators cooking along. So that's an interesting setup for me.
That is an interesting setup. It looks like it's boxed in and ready to break. My first setup is going to be the dollar CAD. It's the Loony. And just for the record, can Loons fly? They can. They just need a little bit more. They need a little bit more room to run before they can take off. So just to set the record straight. But in this case, what we do is we see the dollar CAD right up against resistance. It's a 50% retracement. If you look left, that low that coincides with the 50% retracement is actually the lows back in February of this year. It's also channel resistance. So we're at a very big pivot. And like I said, I saw the market getting kind of excited about the Canadian dollar following all the comments that we saw from the Supreme Court versus the Trump administration on tariffs. But don't get all wound up with that right now. We're still a ways away before we get some sort of ruling on those tariffs. But for right now, I think the resistance is very well defined. It's around 141.50, 141.60. So for those of you that want to be on the short side of the dollar CAD, I believe this is the place to do it. If you get above that, then you're talking about a breakout that's going to take us towards 143. So I think it's a great setup. I personally am long the dollar CAD from a couple of days ago or from yesterday, but I'm not sure if I want to stay in it any longer because I do believe this is a really big pivot for the pair.
Interesting one. I mean, it's just timing anything to the Supreme Court, as we talked about a minute ago, is just how, I mean, it's complicated. We don't know when you're going to get the timeline. And also, if we do get it in January, then positioning for it now, 2 months away, is an eternity in the FX markets. It's, so it is, a tough one. But I like that. It's a great setup. And if you look at the candle, today's candle, the last candle, maybe the way to play that could be just looking at sell stop orders below the low. Obviously you've had the top channel hit. If you put a stop order, so hopefully that momentum takes us low. It could be an interesting way to play that. Let's go to the dollar index, because this is, I'm not sure if you brought this up the other day, Blake, but this is one that's been in this kind of range. Obviously we had a shocking first half of the year and one of the worst first halves of the year I think the dollar's ever had. And we've traded down to the lows in June, July, and we've just been sort of in this range really since. And we're breaking out to the top end of the range. The range extension on a measured move would be 104. We're into the 200-day moving average. We've seen, I think, 6 or 7 days of consecutive highs, although the volatility in the dollar is very low. Implied volatility is pretty much year-to-date lows. So it is a steady grind. It's, as Blake correctly coined it, it's a bit of a stealth move. But I think, whether the 200-day moving average is significant in this case is obviously yet to be seen. Because I think a break of that, we'd need to still see the euro-dollar trade for its medium and short-term and longer-term averages as well. But market positioning is still short. Real money accounts are still short dollars. There's there's a few things working for the dollar, as I talked about, but there's also a lot of things working against other currencies that you trade against that. So, it's kind of a perfect storm at the moment for dollar appreciation. Now, the technicals also marry up a break of the top side of this range. And I think over a period of time, it's not going to happen overnight, given the volatility is so low. But yeah, 104 would be your sort of upside target over potentially by the end of the year.
Cool. A breakout and a double bottom would catch the market poorly positioned going into year end, Chris. I tell you, that's a really heck of a great setup, especially if the dollar does do a Westie, which would be quote unquote kick. So
stealth. I'm a stealth man.
Yes. Stealth kick. All right. So here is my last setup, or my second setup, which would be the S&P 500. So, we were just having this conversation. You guys have seen this chart before. This is not the first time I put this chart on here on the trade-off. We hit the 161% extension of the last major dip, which was following the Liberation Day. We got within striking distance. Went above the channel. We did what we call a throw over, and a throw over is a reversal pattern because you get outside of a channel, you get back into it, then it's a false breakout. That means typically we're going to break back down, and that would take us back below the 50 DMA. But what's really important about this is the longer term. We've talked about it being wave 5 completion after the 2022 lows. From an Elliott wave point of view, this should allow for a reversal to take us back down towards the 200 DMA. And by the time we get there, it'd end up being the breakout point somewhere right around the 6150 level. I think this is a really good setup because, like I said, I think this market has two-way price action. I think if you're looking to go short, I think below the channel support 200 DMA exposes some downside for the next couple of weeks. And the flip side is, if you want to be on the long side, I think you get on the long side near 6,600, near channel support, which would be the red lower trend line. So I think it's a setup that can be played either direction, depending on your viewpoint. I personally think that the equity markets are topping for year end, but that's my personal view that wave 5 is complete.
Bit of a cheeky bit of divergence coming through in those RSIs, triple divergence by the looks of things as well. Might be something to look at. Anyway, good chart there. Interesting view. People, I think a lot of investment managers who are sitting on cash probably would love to see a bit of a pullback before a nice run up and reversal into the end of the year and try and chase that. But obviously the market will do what it wants to do. Anyway, let's go to play of the day. It's a dollar affair here today. I'm going dollar Swiss. I don't know if you're going to be taking the other side of my dollar view, but we've got a nice breakout here. I love the between September and October, we've got that kind of higher low that take place, and then we've seen the breakout of the range. I like the dollar. It's just a question of really what do you want to play it against. Now, doing it against the Swiss franc can be a bit of a lower beta move. But there's factors that are going on in the inflation complex in Switzerland that, if we get lower inflation, they could be looking very closely at the next meeting, which I think is in December, at cutting rates again, which I think is not priced at the moment. And therefore, you'd be taking it deep into negative rate territory again. So it could be an interesting one to play there. So I think we're looking at the inflation numbers coming out of Switzerland. We're looking at what happens to their rates at a time when the JPY has thrown conjecture and optionality about whether or not we get a December rate cut at the moment. Some in the market still seeing it's a high probability, about 70% priced. And therefore, given that optionality that he's put in there, there's no guarantee that we are going to get a cut in December, although I suspect we will. And given the growth dynamics that are playing through in the US and other factors playing through once the shutdown comes and is complete, which will happen in a week or two or so, I think dollar Swiss probably goes up to the 200-day moving average at 83. So I think this is the way I'll be playing it. I think it looks good. Nice breakout. Technicals are working. The market shares. Well, I'm sharing the view of what the market shares, and I think it's good for 83.
Whew, Chris. All right. Well, you asked me if I was going to be complimenting or going against your dollar Swiss, and I'm going to tell you right now, I don't know. Let's take a look at the dollar yen. This is the dollar yen. I believe
you can't do that. You can't.
I know, but
this you don't know.
This is the first time I've come to you guys with a play of the day that I haven't either had a position or I was looking to take a position in the direction that I'm talking about, because frankly, I just don't know. The dollar yen, I think, is set up for either breakout to the upside or a breakdown. The levels are really simple. It's below 153 or 152.95 or above 154.50. You know, you break out of the triangle. I think there's a lot of opposing forces in the yen. Whether you're talking about what you're seeing in yields right now, you know, this breakout in yields, it's complementing what Chris was just talking about with the Swissy. The yen is also very sensitive to that. But you got the BOJ on the other side that might be raising rates. You got Besant, who says that the new Japanese government is not going to interfere with the BOJ, which could be looked at yen positive. Flip side is yields are going up. Dollar yen should break out. I think this could go either direction, and I'm coming with an open mind. I'm ready. I'll take either direction. I'd prefer to be long. I'd prefer to be long the dollar and play a breakout to the upside, Chris, just to be joining you in a parallel type of trade. But I do need to see 154.50 broke. And that's what I'm looking at. I think it's more of a setup than a play of the day, but I am looking to establish a position, Chris, and I'm telling everybody ahead of time, which is what I like to do.
Yeah, cool. And I guess once it does actually complete either direction, that's not going to be a small move. It should be a decent clip that you get out of that as well. So it's a good one for the radar. One to watch. We'll probably look at that one again next week. Blake, thank you very much for your time and your thoughts, and everyone at home, thank you for staying with us, and obviously share it with your friends and family. Let them know about the show. Like and subscribe if you can. Leave your comments about how you're trading the market, some of the views, and what you're seeing on these here markets. And we'll see you back next week for more of the trade-off.